Good afternoon, everyone. How are we all doing? Good morning, good afternoon, good evening, wherever you are. Hello, how are you doing? I hope you are having a great day. I know I am, and I'm ready to trade, ready to make some moolah. But yeah, a few people are going to be joining up because I've been doing a few Instagram reels for these streams. So a few new people I'm expecting today. This is my live stream, so every single day, 2:30 p.m. BST for New York Open, I am live trading every day. And if you want to catch market outlooks, check the free Discord, which is the first link in the description, where I basically give a pre-market analysis on what I think will happen for the following day. But let's get straight into it, shall we? So last week, we had a really messy week, fundamentally and also technically. We had, barely any news at the start of the week, and then obviously the two biggest pieces of news towards the end of the week. Thursday, Friday, we had CPI and PPI. You should know that. On Monday, Tuesday, and Wednesday, we didn't really have much red folder. On Monday and Tuesday, we had zero. Yesterday, we had zero, and we had a US bank holiday. So it is a really messy couple weeks, a really messy start to the month, really, or start to the quarter, you could say. But we are, we have got our heads screwed on properly. We know what to look for. We know what to expect, and we're going to get into that now. But I hope everyone is doing well. Hi, how you doing? First day joining the live. Well, I hope you like it. Hit the like button, by the way, guys. It really does help me out. I hate to ask for all the YouTube business. If you're new here, subscribe, all that good stuff. Liking does really help. But fundamentals out the way. We don't really have much to worry about for the rest of the day. We've had Canadian CPI and we've had GBP claimant count change. Tomorrow we have GBP CPI and a couple other CPIs as well. So there's a little bit here and there. We have a New Zealand CPI at 10:45 tonight. We don't really need to worry about any of this. So in short, all you need to know is that we don't have anything to worry about fundamentally. So moving on to the charts, right? We're going to start on GJ as we always do. Just give it a second to load. So I did take a trade yesterday and it ended up break even. As you can see, we ended up break even there. I got in, using AMD, using the fair value gaps and stuff, but because of the lack of volume we were getting from New York yesterday, I did in fact change my mind, kind of, because we did start, if we go on the 5 minute, we did start basically respecting a fair value gap, then we started moving up. So I just got out. I lost $70, which is like 0.01% of my account size. 0.1% of my account size, sorry. Basically break even. That's the trade I took yesterday. Nothing really happened with that. Now, what are we actually looking for in the markets? So this might look a mess, but do not worry. I'm going to break it down for you now. What we're going to do is we're going to start on the monthly time frame very, very quickly. Not much to cover here. All you need to know is that we are inside of a monthly fair value gap. Hey, Dan, how you doing? Hey, Rodrigo, hope you're doing well. But yeah, so we are currently inside of that monthly fair value gap still, as you can see. We're still inside of it. We're still pushing, looking to respect it ultimately. Now going down to the weekly, again, we're inside a weekly fair value gap as well. We're in the premium zone, so we're looking to come down at some point and respect that. A key thing about the weekly, by the way, guys, is that the weekly does not have a bottom wick. And if you know anything about how candles form, if you know OHLC, the open, high, low, close concepts, you should understand, and I've said this before, that when a candle opens and it doesn't have a top wick or a bottom wick, you can expect it to flip to create that wick before the candle closes. Now, if a candle closes with no wicks on either side, or one wick with no wick on either side, yeah, there we go, then you can expect it to be a strong continuation. So if let's say we didn't have a bottom, let's say this weekly candle closed with no bottom wick, we can expect a nice bullish move up. Like, that's a bullish confirmation. That's a bullish candlestick. The same thing applies for bearish moves, for bearish candles. If there's no top wick, then you can expect a nice move down. Now, that's only when they close. When they are open, you can expect it to flip. The probability is that it will flip. Now, there's 3 days and 8 hours left on this candle, so we are expecting price to come down and flip, close bearish. And if it does close bearish, that is great for us. Why is that great for us? Because that will form a nice evening star candlestick pattern inside the manipulation phase of the weekly AMD cycle, which is also inside of the premium zone of a weekly fair value gap and the monthly fair value gap. So we have a lot going on here on the higher time frames. It's basically like my grade A setup, which you will see on the 15, on the 1 hour. What you'll see on those lower time frames is basically happening on the daily, on the 4 hour, on the weekly as we speak. So on the weekly, we are inside the premium zone of this bearish fair value gap. We are yet to disrespect it. So, the probability that we will respect it is still high. We've got no bottom wick on this weekly candle, so we're expecting a flip down. But moving on to the daily, before we have the flip down, I want to see price taking out this liquidity. On the daily time frame, you can see a nice yellow box, which indicates a nice accumulation. As you can see, it's pretty clean. Literally just straight barcoding. What I want to happen is price will come up, in the manipulation phase, taking out this liquidity up here, this liquidity over here. Now I'm going to get rid of these drawings, but I want price to do that. Once it has done that, then we have the context for the trade. If you know anything about my strategy, or if you know anything about my confluences that I look for, you should know that I always tend to look for context in my trade. And context can come in the form of obviously filling an imbalance, or it can come in the form of taking out liquidity. Now you can also call it seeking liquidity, but the two main movements are taking liquidity and filling imbalances. That's what the market does. So if we take this liquidity up here, this is buy side liquidity. That means we've took a lot of buying liquidity. So we're going to have a nice move to the downside. That is how AMD works. That's the whole idea of AMD. And we're applying that to this liquidity zone up here. So if we get a nice move up, taking out this buy side liquidity on the left-hand side, then we can expect price to basically have a bearish retracement. So this is a bearish confluence. Taking buy side is a bearish confluence. That's what I look for in my trades. I look for context in my trades. On the daily time frame, we've got a nice accumulation. And if we come up and take out this liquidity, that's a manipulation to the upside, which is what? A bearish confirmation. If we manipulate up, we would look for sells automatically. That's how price moves. Consolidates, moves up, moves down. Consolidates, moves down, or moves up. If it moves up in the manipulation, we can expect price to move down in the distribution. So that's bearish. But we will also be taking the liquidity out in that manipulation, which is a bearish confluence in itself. So we've got a strong bearish confluence there. All we'll need to do, once we take this liquidity out up here, all we need to do is look for a candlestick pattern either on the 4 hour or the daily, preferably the 4 hour because the daily is a little bit slow. And this is why this trade would be so perfect, guys, because if, let's say we take out this buy side liquidity up here, let's go back to the daily. Let's say we take out this buy side liquidity here. Bear in mind, the weekly, hopefully, will still not have a bottom wick. And this is where it relates back. So using OHLC, we can expect that's a bearish confluence coming to the downside to make a bottom wick. So if we take out the buy side liquidity, look for a candlestick pattern, which is bearish, obviously, we can then look for sells not only down to here, but we can look for the bottom of the accumulation range. And if we come to the bottom of the accumulation range, that will be a bearish candle on the weekly time frame. And why is that perfect? Because if we form a candlestick pattern on the weekly, as we've just discussed, we will have an accumulation, manipulation to the upside into a higher time frame, monthly, fair value gap, then formed a candlestick pattern. That is the grade A setup we are looking for on the daily, pairing it with the liquidity. And it's what we will get on the weekly if the daily plays out in the distribution to the downside. So we look for daily to take out buy side liquidity, look for a 4 hour candlestick pattern, take that sell. Not only do we take it to the bottom of the accumulation range, but we also take it to the bottom of the weekly accumulation range, which is a massive, massive move, guys. Like we're looking at what? Like 1,000 pips. Like that sounds ridiculous. That's where my full TP will be. My full TP will be the bottom of the accumulation range. And not only that, if you really want to be greedy, more long term, you can even just go to this low over here, or maybe this low over here. Now, that would make perfect sense as well, because long term, we do have a bearish bias due to Shigeru Ishiba, the new leader of Japan, being hawkish, meaning he wants to raise interest rates. And we've gone over why that's bearish as well, because people see the JPY or the yen as a safe haven. They are no longer going to see it as a safe haven. Why? Because the interest rates are starting to rise, because the new leader is hawkish. That's our bearish bias. Fundamentally, technically, our bearish bias is the monthly fair value gap, which we are starting to respect. If we take out the daily liquidity, form a candlestick pattern, then go to the bottom of the weekly accumulation range, think about what that would look like at that very moment in time. You will not want to close your trade there. You don't have to close your trade there because we will still be continuing down because we've respected the monthly fair value gap. So we can expect a nice move on the monthly time frame, which is a massive move on the daily time frame. Does that make sense, guys? Now, that is a lot to take in, but it is also a lot on our side. We have a lot on our side for this trade. If we can just take out the daily liquidity, that is all we want to do. If we just take that out, look for a 4-hour candlestick pattern, we can take a very clean sell position down to 184, 180 even, breaking into the 170s. That is extremely long term, and that may take a few weeks to play out. Don't get me wrong, it's not just going to happen in one day. But you can take partials on the way down. We will, if you risk 2% on this trade with your stop loss in the right place, it should only really be, your stop loss could only be here, just above this fair value gap that we've inverted over here on the weekly. You can put it just there, all the way down to here. You know, and you could even just get a more, a cleaner stop loss by going to the lower time frames, going to the 4-hour time frames, and seeing what's going on there as well. Like maybe putting up here instead, actually. That would make the most sense over this high here. And you're looking at a nice 4-hour trade here. If we come down to this, if we just come down to here, now you can take partials on the way down, whatever you want to do. But this is the trade I am looking for. And that's like, that is it. Like it, that should make so much sense to you. If you have any questions, let me know. I'm putting a deposit down on a G-Wagon. No need for a stop loss, yeah. No stop loss, gang. Yeah. But that's all we're looking for. Like, you know, it's all starting to align. Now, you will have seen this forming over the past few weeks. Like, going to the weekly time frame, you can see that we even caught an internal, more internal, it's still external, but I guess you could call it internal. We caught a daily AMD cycle in this move, in this consolidation here. We caught multiple sells, buys all over the place. And now they're all starting to align. This is perfect. This is perfect. Now, obviously, there is the slight chance that, you know, AD, accumulation distribution, could come into play. And that is why I look for my external range of liquidity. That's why I look for the external liquidity to be swept or took before we take our sell positions or take our positions in general, because we want that probability on our side. We don't just wait for price to go up above accumulation and then sell. We look for it to form a candlestick pattern, which is bearish, inside of a bearish fair value gap or bullish fair value gap, whatever the confluence for the trade needs to be. We wait for a candlestick pattern, we wait for fair value gaps, we wait for context. And the reason we wait for context, that is probably the key. That's probably the key sign that we're going to respect it. But pairing it with a fair value gap is even better, because not only will we get the bearish retracement after taking liquidity, but we will also get, obviously, the move down from the bearish fair value gap, which is like has a domino effect from taking the liquidity. So that's why I look for the liquidity. It's an added confluence. It gives me that edge so we can avoid taking or losing trades to the accumulation distribution. Now, that's the only time we lose. The probability that we lose is based on accumulation distribution. Because I trade AMD, I wait for price to go up and then take a sell, or go down and take a buy. It could be distribution. Now, what differentiates that from, or what increases the probability that we're going to win, is pairing it with context, which is external being taken, or fair value gaps, or candlestick patterns, and I use all three. So that's why I'm looking for that context. But I hope that makes sense to you. As I said, ask me any questions. If you want to learn the guide on, or if you want to learn bits and pieces on how I trade this, go to my free Discord server, which is in the first link in the description, and there should be a free course link in there. I'm looking at it right now. Like, if you go to the free Discord, go to education, free course, click that, there's a link, join the waitlist, and I'm accepting waitlist at like 10 p.m. every single day. So yeah, if you want to learn bits and pieces on how I use this strategy, the basics, it's basically, you'll learn fair value gaps, liquidity, AMD, obviously, and you'll also learn a little bit about risk to reward ratios. The fact that beginner traders shouldn't care about risk to reward ratios and why and how it affects trading and stuff like that. So if you want to learn all that out, if you want to learn all of that, sorry, it's stumbling out my mouth. If you want to learn all of that, go to the free Discord, free course in there. But that's it really. Like, that's what we got to wait for. What we're going to do is we're going to look at Bitcoin, gold, GBP Swiss franc. I don't know why that's there. And obviously USD JPY as well for some people. Now, we were very close to making this wick on the weekly. Now, the key to this trade, just before we move on, is that we don't take this wick. If we don't come and take this wick out, or make the wick, sorry, then we can take the trade. But it's going to be a little bit more risky if we fill this wick, because then it's not as guaranteed to move down. So really, we do really want to see this liquidity being taken before we make the bottom wick. If we do this, if we make the bottom wick and then come up and take this liquidity, you know, that's kind of like taking one of our confluences away from us. But yeah, if you like the stream, guys, if this makes sense to you, if you agree with what I'm saying, hit the like button. Helps me out a lot. You know, I do hate to ask, it's a bit beggy, but it does really help me out. There's a nice positive correlation between the likes on my stream and the views, and it does help me out a lot. So it takes 2 seconds. But yeah, moving on, we're going to look at Bitcoin, gold, and USD JPY. I don't know why the Swiss franc's there. I don't trade it, never have, ever really. But Bitcoin, what happened on Bitcoin? So as you can see, I had perfect take profit placement, but this is a perfect example of what I want to talk about with the liquidity. Okay, with the liquidity. Now, there wasn't really much here. I think I was using the 4 hour, maybe the 1 hour for the liquidity here. But what I want to show you is that I was targeting the sell side liquidity. Why was I targeting the sell? People will be like, oh, price has just made a new low. It's definitely going to go down. You know, it's a lower low. That's a trend reversal. Nah, that's not how it works. It's liquidity. So we take in liquidity. We take sell side liquidity. If you understand AMD, you will understand how this works and why I use it. But we take the sell side liquidity and look how good of a stop loss a take profit, sorry. Look how good of a take profit that was. We come down, take sell side, which is a bullish confirmation. We take out sell side. Obviously, as you can see, it's a grab, not a sweep. So we quickly come in, take out the liquidity, and quickly swoop back up, taking out buy side liquidity here. So we do have a change of character, I guess you could call it. I still need to fucking pay for that thing. But that was a perfect trade. Now, what is actually going on Bitcoin? We're going to look at that now. Look at my analysis on Bitcoin now. Discord link expired. Fuck's sake. I don't know why this keeps happening. Sorry about that, guys. I'm going to update the link right now. I should be able to do it from here. Sorry about that, guys. Technical issues with the Discord link. Right then. Should be good to go now. Also, notice the fresh trim. It's literally just a skinhead. The link is now valid. You can use the link now. It should work. Let me know, please. The Phoenix, please. If you can let me know, that'd be great. Bitcoin. What is Bitcoin saying? So, we've pushed up. You know, obviously, a lot of people call this Uptober. And my view on Uptober as a whole is that BlackRock are not really going to let that happen for much longer, especially now they're starting to control the majority of Bitcoin. But we are pushing up very, very nicely. You know, we have been for the past few days. What we're going to do is we're going to go back to this consolidation over here. And this was last week. This was last week, I think. Yeah, Friday the 11th. And then obviously Saturday, the weekend, we just consolidated. Then we had a nice move to the upside, which looks like we've gone straight to distribution, and we will know if we have taken any liquidity. Yep, we took this liquidity over here, and we're just continuing up, which is a sign that this is just the distribution move. Now, obviously, this is a very, very quick move to the upside. We've got a nice BPR here. We've got a nice bearish fair value gap overlapping with a bullish fair value gap right here. So this is the BPR area. Now, this would be a bullish fair value gap. People will be like, oh, yeah, well, you drag it from this wick to this wick. This is how the BPR works. Use the previous fair value gap because that's how you measure where it overlaps. So we got a nice BPR here. We're probably going to come back, retrace to that, and then continue up. That makes perfect sense because we've took buy-side liquidity here, so we are due a retracement, Remember, it's not a complete trend reversal. It is a retracement. So we take buy side, retrace down, fill in this gap, and then boom, go up. As I said, what does price do? It seeks liquidity and fills imbalances. That's literally it. Now, people can add and remove little bits. Like, you could say it takes liquidity and then, I don't even fucking know. All I know is that it does two things. It seeks liquidity and fills imbalances. That's all you need to know. So price has done that. It's took the liquidity and it's going to fill the imbalance and probably continue up. I don't know where. Like, honestly, it could go anywhere at this point. Obviously, the next zone that we want to target is this liquidity up here, and it doesn't seem to be much in the way of fair value gaps. There is this area up here, and as you know, fair value gaps are support and resistance, so we can expect price. Yeah, we can expect a retracement here. If we continue up, we will more than likely get a retracement here. Oh, excuse me, sorry. We will more than likely get a retracement here. But we are also due a retracement now. What would make the most sense to catch the cleanest moves would be something along these lines. So we take a retracement to the downside. Then we go to a lower time frame. Obviously, we are on the daily now. We go to the 1 hour, we go to the 15 and the 30 minutes, something like that. Look for a nice internal accumulation. Manipulate to the downside, coming into the premium zone of this bullish fair value gap. Or the discount zone of this bullish fair value gap. Then, this is all internal. We then take a nice buy position internally, which aligns with the retracement continuation on the daily time frame. Then we target this fair value gap here, which also aligns with this liquidity on the daily as well. And that would be a perfect trade. It makes sense to do that. Although, on the daily, we do have a little accumulation here. We do have a little accumulation, which kind of goes against our trade idea. But now that we've inverted this bearish fair value gap, it really does depend on what we do from here. If we start retracing, if we go back down and form a candlestick pattern on the 4 hour, then you can look for sells. You can take sells, and that would work just as well, maybe to the bottom of this range. If we continue up and just keep pushing up, then obviously that would expect the retracement up here. This will be the distribution. Then you expect the new cycle of AMD on the daily. But that kind of contradicts the trade idea of basically coming down, then going back up. We would expect price to actually flip now and come to the bottom of this range, at least. So I'll have to see how that plays out. There's a little bit going on either side. Just taking a sell entry in New Zealand JPY. In 15, check it out, please. I will in 1 second. Just gonna have a quick look at gold. I haven't really traded gold the past few days, but I still wanna let this move play out. So we had a very long and clean consolidation on the 4 hour time frame on gold. As you can see, we then come down into this fair value gap, which is the daily fair value gap. This is the textbook stuff that I am telling you about, guys. We take the accumulation, we accumulate, then we come to the downside, fill in this fair value gap, form a candlestick pattern on the 4 hour time frame, which is the same time frame we look for AMD on. As you can see right there, I took my entry a little bit late. It was really early in the morning, late at night. I shouldn't have really been up, but I was. And then I targeted this area up here. So this trade is still playing out. This move is still playing out. That's why I'm not really looking for any more trades on gold as of recently. But what I decided to do, why did I close it earlier? So you can see these pink lines. I draw the pink lines where I look to manage my trade. I look to manage my trade exactly where we started accumulating or just consolidating on the 4 hour. But what happened here? So we have liquidity here, and that's the end of the story. Like, we had liquidity here. We took the liquidity, and I was like, okay, I'm going to take my profit here. I think what influenced this decision most was the fact that last week we did actually lose a trade for the first time in like over a month. We went the whole of September without losing a single trade, and I didn't just take one trade. I took like 23, I think it was 25, 23, 25, along there. A few break-even trades, granted, but every other one, almost 20 winning trades in the entire month of September. Then we went into the first week of October, didn't lose any trades. Last week we lost one trade on GJ. We lost just under 2%. I think it was like £900, $900. We lost that. Then Bitcoin came in clutch and we made 2% on Bitcoin. And then I made 2% on gold. At that point in time on the chart right now, where this take profit is, that was where price, that's where I was making 2%. So I was like, okay, I'm going to secure this 2% here. Very, very nice. And that makes me 2% up for the week, coming back from a losing trade at the start of the week. So that's what influenced that decision. But we haven't actually finished the move yet. We still are due a move to the top of this accumulation range to take this liquidity up here. So I'm not really going to be looking for trades until we've done that, because obviously, it's not right. It doesn't fit my plan. I want to align the daily with the actual trade idea, and the daily is saying we're going to continue up, and we're still in the distribution. And I do not trade in the middle of the distribution. That's quite risky. We're not as guaranteed a move. USD JPY, bit of a mess again. Really, really messy. If we go to the daily time frame, we'll see what's going on maybe a little bit better. The weekly, even, maybe. Really, really messy, this. If we go to the 1 hour. The 1 hour seems to be consolidating. I think I was looking for a manipulation to the downside on this about a week ago, sometime last week. We didn't end up doing that. I think what's happened is we manipulated to the upside, as you can see. Took out this liquidity up here, which we'll point out in a second. And then we, I'll check AUD USD as well in a second, Hugo. So we have took the liquidity out over here with this line. We took out all this liquidity over here, as you can see, with the manipulation. Now, if we go to the 4 hour, we can see if there's any fair value gaps. There we are. There is a very small fair value gap here, which we had respected multiple times. So it wasn't, as guaranteed to be respected, hence why we've kind of broke up above it, then broke back down below it. So that would have been a bit of a sloppy entry. But on the 1 hour time frame, accumulation, manipulation, distribution to the downside. So we are waiting for another accumulation. We might even continue down to here to take out this liquidity first. Distribution has technically done its job. As I've said multiple times, we wait for price, manipulate up, accumulate, manipulate up, and then take the other side of the accumulation range. And as you can see, the price has accumulated, manipulated up, took out this buy side liquidity, which means we were due a retracement. We got that retracement, paired it with the distribution move, and then took out the other side of the accumulation range. So technically, we don't have to continue. But when you look at this fair value gap here, which has been respected, you can say maybe we will continue down and take out this sell side liquidity over here. I hope that makes sense. Hope that makes sense to you. And that's what I'm looking for. That's not what I'm looking for, really. I don't trade USD JPY. But if you want to trade USD JPY, the safest thing to do is just wait for an next accumulation. Now, we may continue down. It's up to you if you want to take that. What I advise is just take a nice break. Wait for an accumulation. To be fair, though, you would have had a nice entry here with this candlestick pattern. But just wait for that accumulation next. That's the best thing to do. If in doubt, I don't know. Trying to come up with a saying there. If in doubt, just wait for the accumulation. That's probably the easiest thing you can do. Let's have a look at New Zealand JPY and AUD USD now. AUD USD. New Zealand JPY. Sells, not really the best. Very, very clean accumulation here. Straight barcoding. Then we manipulate up, take out this liquidity up here, fill in the gap that we made from the open and the close of, I think this was Friday and Sunday. So we had a little gap down here, filled that gap, took this liquidity, then moved to the downside. This literally should be second nature to you guys now. If you're watching my stream every single day, I don't even need to draw the boxes anymore, really. You should just be able to see it. Once you see the accumulation, just get used, if you're struggling to see AMD, get used to going back to the most recent consolidation and just work it from there. It's so simple. All you have to do is go back to the most recent consolidation, which, as you can see, is right here. and then everything else just clicks into place. If you know what you're doing, it becomes so easy. So easy. Obviously, practice comes into play as well. The more you practice analyzing the charts, the easier it will be. As you can see, I analyze like 5 things a day. Or, granted, I only trade like 2 of them, but AUD USD. Actually, sorry, I'm going to finish my analysis on this. So, the same routine as the USD JPY, to be honest. Bilk. The same routine, just wait for an accumulation. Sells aren't really the best idea. You could catch a continuation, I guess, but the best thing to do is wait for an accumulation. Now, what actually aligns with your trade idea? What's a redeeming quality for your trade? Well, we do have a fair value gap here, which has been respected. We do also have a 4-hour candle with no bottom wick, which is, as I said, a very strong confluence. You can expect price to come and flip and make this bottom wick at some point. So if you've got in around about here, if you got in here, bilk, that is probably the best entry you could have took. Perfect confluence, no bottom wick on the 4-hour time frame, which is a perfect confluence for a move to the downside. Now, where would we move down to? You could look at this over here. That was the worst straight line ever. You could look for a continuation down to here. It's up to you. But the best thing for you to do, I'd say, is just wait for that accumulation. Now, if you're in the trade, you can wait for price to come and make that bottom wick on the 4-hour and then see where you are in terms of percentage then. Maybe get out there. But the next thing we're due is a accumulation. Now, AUD USD is also extremely, extremely messy. We've just been, I think the past few days across GU, EU, and AU, we have just been accumulation, distribution, accumulation, distribution, accumulation, distribution. But as you can see, we have had a nice accumulation for the past week now, which we are looking to break out of. This relates back to what I was saying with the accumulation, the lack of news, sloppy charts last week due to the lack of news and stuff like that. But this is what I'm saying. So we've got a nice accumulation here. Should be second nature to you now. We come up, take out this liquidity, and also this is the IRL, but it gives us context for the trade still. We come up, take out this liquidity, come into this fair value gap, which hopefully come into the premium zone, go to the 1-hour time frame, the 30-minute time frame, maybe even the 15 if you want to push it and be cheeky. Look for a nice candlestick pattern. Take a sell down to the other side of the accumulation range. Now, this would be management spot number 1. Where would full TP be? Well, that's pretty self-explanatory now that we've zoomed out. You can see it right down here. That's all you should be looking for. We've got a nice accumulation going on now. If we can come to the upside again, we still have a gap to fill, by the way. We still have a gap to fill right here, which means we are going to come up. It's like almost 100% guaranteed. You could buy now. If you buy now, you will win. It's just how long you can hold it. We will fill that gap at some point in time over the next few hours before the day closes, or before the week closes, at most before the week closes. Now we come up, take out that, fill out this gap, come up, take out the liquidity, come into the fair value gap, all that good stuff, form a nice candlestick pattern, come to the downside. Management spot number 1 is obviously the other side of the accumulation range, and you can look for full TP to be down here as well. Now obviously I'd look to manage here, but yeah, that's it. That is literally it, guys. There is not much else to say now other than like the stream and join the free Discord if you are new. I hope you enjoy these streams. I hope to see you again tomorrow at the same time, 2:30 p.m. BST. But there's not much else. Quick recap. We're looking to take out the daily liquidity on GBP JPY, then form a nice candlestick pan, and we can take a massive sell position down to like 180, breaking into 170 potentially. Bitcoin just pushing up and up and up. Bit messy, bit too much going on here for me. Gold, as I said, I took a trade, won the trade, but we're still in the move. I closed a little bit early due to the loss I took last week, which I guess you could call bad psychology practice. But, if you look at where my take profit was and look how prices acted since then, you could say it's a masterclass. Now, USD JPY, wait for that accumulation. As I said, you could come down to the bottom of this range here, take out this liquidity, We have come to the bottom of the accumulation, so we're not as guaranteed to come down here as you would usually be. We have also respected a bullish fair value gap here, so not really the best sign. New Zealand JPY sells are honestly not the best thing. You could take a sell to make this bottom wick, but after that, there's not really much else in it for you. AUD USD, we're in a massive consolidation. You want to look for a manipulation to the upside and distribute to the downside. Pairing it with your bearish bias, that would make the most sense. Head and shoulder pattern up here, by the way, which I think I said actually about a few weeks ago, but that's the recap. Like, there's not really much else to say now, guys. We just got to wait for this to happen. This is where patience comes in. We have the knowledge. We have the experience. We've got the expectations. We've set our expectations. Now is the final piece of the puzzle. All we need is patience. Just wait for this to set up, play out. Once it plays out, we can take the nice trade. I'm hoping it plays out sometime this week, but if it doesn't, it is what it is. We've just got to be patient and wait for this to happen. And as I said, the key piece of this trade, guys, is that we don't fill out the bottom wick of the weekly or the daily before taking out liquidity. We want to take this liquidity first on the daily time frame before we actually target the bottom wick, or before we start trying to create the bottom wick on the weekly and the day on the weekly candle. So that's the key thing. We want to see the daily liquidity being took before we come and form the bottom wick. But other than that, I hope you like the stream, guys. I hope you can like the stream for me. If you do, it really does help. As I said, I hate to ask, but it helps me out tons. If you're new here, subscribe, all that good stuff. Free Discord, first link in the description. Fast Track Trading, second link in the description. If you want a taster of what's inside Fast Track, inside the free course, inside the free Discord, there is a free course, and that comes with a 20% off code to the course as well for the sneaky devils out there. But that's it, guys. I've got nothing else to share. This is my analysis. I hope you enjoyed it. If you've got any questions, as always, tag me in the Discord, send me a DM, whatever it is. I will be more than happy to help you out. But yeah, that's it. That's the analysis. Like, as I said, sit on your hands, wait. Patience is the final piece. Patience is all you need now. Patience. We know what to expect. We've set our expectations for the market. This isn't a prediction. We've set our expectations. We're waiting for price to meet those expectations, and then we can go about our day. Cheers, Dan, and I'll see you later, guys. Have a good rest of your day, guys. Take care. Remember to be patient. Don't force any stupid trades, and have good risk management. I'll see you guys tomorrow. Same time, same place, 2:30 p.m.